How's it going, everyone? Welcome to the weekly trade analysis for the week of 7/14. This week I took 9 trades, 5 swings, 4 day trades. I was at 3 wins, 2 losses, 0 scratches on my swings, 2 wins, 0 losses, and 2 scratches on my day trades. Total profits of $67.80 this week. So managed to squeak out a small win when I could. So we'll talk about what happened with the market this week. I'll go over my swings. I'll go over my day trades, and I'll probably close with the swings that I had from last week that were originally day trades, but I turned into swings. There's some more explanation I want to say for that, so I'm going to save that for the end and separate that out from the other swings. So let's start with what the market did this week. So as you can see, we're continuing this uptrend, but it is quite slow. It is quite gradual. We're getting these dips, barely making new all-time high, dip, barely making new all-time high, and so on. So on these little dips is when I have generally been entering longs. And I think I took one swing short this week, but for the most part, I have been sticking to the long side over here. I think it's just hard to short this market right now. There are some good shorts here and there intraday, a couple overnight, but I'm finding a lot better picks on the long side and a lot easier on the long side here. So trading with the trend until I really just see it stall out for a while, kind of like it's doing now. So I'm going to zoom into this M30 chart. Let's take a look at the last couple of days, just get the context. So we start here on the 14th. Market has tested the all-time high, gap down, poked above, couldn't quite get back in. We get that test of that gap down, and then the market rallies the rest of the day. We get a gap up to new all-time high. I think there was some NVIDIA news here. We also had CPI that came in line, but maybe is slightly hot. Got some selling pressure that filled in the gap. And then we actually got some nice follow-through selling for the rest of the day and a little bit on the 16th or Wednesday. We got this big bullish hammer, which looked like it was a selling climax, rebounded back into the range on some nice volume, and then we continued up. So over here, we had a nice tailwind for this half of the day, the full day, and then the beginning of the next day. So a little bit less than 2 days here, we had a tailwind. Market gapped up to a new all-time high, sold off a little bit, but wasn't as strong as what we saw over here. Buyers kind of stepped in here, stepped in over here, and they stopped that bid. So kind of after this initial open, this price action basically became an inside day, and we didn't do a whole lot. So definitely some two-sided price action this week. On a longer-term basis, I am mildly bullish. Like I said, we've had a strong move from these lows to a new all-time high. We've broken out and we've held that all-time high. And the market is, advancing on a decent move after this this gap up kind of in May over here. That's where we flipped to more neutral. And then after that, a little more bullish as we broke through here. So I am still mildly bullish in the longer term. There's some fundamental stuff going on, but we have some earnings coming out. We got some seasonal weakness in August. FOMC Fed rate cuts. We'll see if they announce any or if they get pushed to September. I think last time I checked the Fed data, it's more likely to be September. So my medium-term outlook is, kind of more neutral right now. I mean, I think, market has been compressing for a while here. We are likely to see maybe some sort of dip. And then in that dip, we can gauge the selling pressure and then line up our next opportunity for swing long. So that's pretty much what I'm considering dip-wise. On a very short-term basis, like what I think is going to happen next week, I think this is going to continue until it doesn't. That's pretty much the plan. After this long run, the market didn't actually sell off really hard. Buyer stepped in here. Buyer stepped in over here. And so they've just kind of been pairing off. They haven't been too interested at the all-time high. There's some selling pressure here, but they have been willing to buy dips. You can see here, got this little dip bought here. Even this dip that poked below the 8 EMA got bought, and then we pushed back up to a new all-time high. So when these dips actually poke through here and reach these deeper lows, that's when buyers step in and we get that slingshot that actually breaks above that all-time high. So given that market analysis, what I was thinking this week on my swings was I took some bullish swings earlier in the week, and I weathered through this pullback. But if the market broke out to a new all-time high on a gap up, that was my clue to take profits and then wait for that next dip down, which we might get early next week. All right, so let's go over the swing trades this week. Now, I opened 3 swings this week. I had 5 swing trades, 2 of which I closed. But let's start with the first trade I took. And let me just sort this in order here. Okay, so first swing trade I took was WDC. So I took this. Let's zoom into this chart. So first, as you can see, here's a really strong D1 chart, organized price action, test this 8 EMA, and then rallies higher. So had some nice stuff over here. Stock was breaking out above this compression high, bouncing off that 8 EMA, continuing the trend. So this was a nice setup over here to get in on the stock. Now, the volume on that day wasn't particularly strong, but the D1 trend was very strong. And on the 14th, you can see that it was one of the few stocks able to rally when the market was pretty dead. So that's the D1 setup. I'm going to zoom into the M5 chart. All right, so this was the move that over here. So on an M5 basis, what I was thinking was, all right, well, look, we got this gap up. We tested this low, immediately filled in the gap, or we kind of got this bullish candle here on high volume, held, and we just started to grind up higher. So WDC on that day, pretty strong early. It did gap down, but it filled in that gap pretty quickly, had some strong price action. Here it is testing that prior high, broke above that prior day high, tested it over here, and then started to launch up. So when I saw the move, it was somewhere over here, looking good. But as you know, on the swings, I am waiting for a better bid. So I was bidding, I think over here, I was looking at the, what did I take here? I was looking at the August 1st 63 calls for $5.25. So right now they're at $5.60 kind of when I saw it. So I figured I'd dip. It'd probably come back to VWAP. I saw it was choppy. Might test this prior high. So I just bid lower at $5.25, and I got my fill on $3.15. There was this candle that poked lower, and I got a really favorable fill on that. So great, just goes to show sometimes you get a nice fill if you're patient with the order. So I got this nice fill at $5.25, and again, market was just kind of rallying for most of the day. We got this big gap up overnight. This stock also gapped up overnight, but I didn't take gains right away because on WDC, I'm going to zoom out over here. I'm actually going to go to a monthly chart because that's the only time you can see this. There is this pretty long-term monster trend line coming in from December of 2014 touching March of 2018 that it's coming up right over here, just at around $69. So when I'm looking at this stock over here, it's approaching that trend line. It hasn't quite hit it, but my target was that trend line. I figured I could hit $69 and I'll get out for roughly $7 for the call. So $1.75 overall in the position. So we got the gap up. We did test that level, as you can see here, and the market was selling off pretty hard. So market was selling off, and I was like, all right, it filled in the gap. It could go over here, and if it really starts to break down, then I'll scratch out of the trade because I have a really nice fill over here. But stock held the entire day near the high, so I was like, all right, cool. Well, it held the entire day. So when the market finds support, this stock should be able to launch up, and I was actually expecting to hit my profit target in the next day. So SPY gets a dip down lower. And then WDC actually has some weakness here, some follow-through selling. It fills that overnight gap, and it's testing the 8 EMA over here on the 16th. We double bottom up, and then we get a nice rally back the next day. And you can see that it actually rallied later than SPY. So its rally started actually kind of over here, which tells you that there's a little bit of selling pressure. So I held it for the rest of the day, and it still looked good on, if you look at Thursday, right, market's just kind of grinding up higher. And I figured, all right, we test the all-time high. We didn't get smacked down, so we're probably going to poke above it higher, and I'll take gains on some kind of gap up. So we got a small gap up in the morning, and on the open WDC, initially it had this kind of long red candle, and I was just about at my scratch. I was like maybe like a little bit in profit if we zoom out over here, right? Oops. So no, it's a little hard to see, but I got my fill over here at the stock was maybe call it 66.90, and then it was somewhere over here 67.50. But started off as a long red candle filling in some of this gap. So, and I just bid for a small win, and I eventually got it. And eventually it had actually move up over here, and I could have gotten, you know, $1 on those calls, but ended up exiting it for $5.60. So took a small gain. A win is a win, but you know, was unfortunate. I didn't think it would break through over here, but that's sometimes the tricky part on the opening candles. I took it before I let it sort of finish, and you know, didn't ended up going much more in my favor. So it could still hit that level. You can see that the market sort of bottom. It tested this, broke through this prior day's high, came back and tested it and held this level, and it was compressing at the prior high around $68 where it got stalled. So that call is actually right now it's going for $6, about $6 here. So still back at where it was a couple days ago when the market gapped up. So took a small win in that, but pretty nice trade overall. I like the pick. We'd like to get more profits, but you know, I'll still take the win. Next swing I took was NRG as a short. So I saw this on the 15th, and I really like this setup over here. So on the 15th, market had a gap down, and it was, or sorry, gap up and selling off, right? So looking for maybe some relatively weak stocks. And then since the market was bearish over here, I figured even on a bounce, I could take some shorts and profit on that next leg lower. So NRG, this stock was kind of basically gapped up on this big earnings candle over here on the 12th. Compressed for a while and was just hitting some resistance around 162. Poked back above it here. This was a marginal new high, fake breakout. You can see the high volume bearish hammer, and then that eventually flushed out some of these buyers, and we started to break through support on this low around 147.69. So when we broke through that low is when there was a nice short there. I think Dave took this as a day trade, but I wasn't really looking at it for a day trade. I was looking for it more as an overnight swing. So I just took shares on this guy. And so this was the D1 setup. Let's go to the M5 chart. Okay, so this is when it tests this compression, right? You can see 147 here. It's hitting this level. Was 147.90, yeah, somewhere over here. So it poked through, came back, and was just chopping around over here. And then we got this big flush down over here. So I saw it over here, and I was like, maybe I can take it, but I'd rather just get in on a pullback. So I let this move go. Stock pulled back. And I was bidding at 147, which was around, yeah, pretty much right at this prior low over here. So we poked back above it, and I got filled over here. Took a little bit of heat as it pulled back a little bit higher, but you can see it was kind of getting around VWAP over here. And then I put an order out to take profits at 145.50, which was near the prior day low. And my thinking for that target was like, all right, I know it's probably going to test the prior day low. It could make a double bottom higher low and then move back up to test the 50, which was, I think, somewhere higher. So in that case, I would still take profit. But if I set my target out for 145 and it didn't quite get there, you know, then I would be in trouble. So that's why I set it for a $1.50 target. So I got it at 147, and then I hit my target the next day. So I got out for a $1.50 gain on 45 shares. And then, yeah, there was the market over here, gapped up, and then had some selling pressure early in the day. So I figured that there's sellers probably still take one more shot. And if the market gapped down, I would take profits. If the market gapped up, it'd probably take one more leg lower, and then I could get in some profits. You can see on some of this volatility in the middle of the day around 11 to 11:45, we did actually poke lower. So I did have a chance to get a little bit more, but kind of tough. It's gaining some relative strength, and also you can see it was actually testing this low of the day. So in my opinion, without this market volatility at 11:15, it would not have broken this low of the day. So nice, solid hit and run exit. Actually, I mean, this one trade kind of flipped me positive for the week. So glad I took it. And I think I saw as Dave took it, but the goal, my fun fact of the week is that I saw this, and then right after I saw this, I saw Dave took it, and I was like, huh, nice. All right. So I guess I'm on the right side of something. But two people can take the trades and have different strategies. He took a day trade and then took gains on this bullish hammer at 12:55. Which was, right here on this long red candle here at 12:55. He took gains into strength on the calls, whereas I was like, I'm going to swing this overnight and try to get a bid close to VWAP. So, yeah, I like this. It was still pretty good. I think only thing I would have done, maybe I could have bid a little bit closer to VWAP. Probably get another 50 cents on this. Other than that, don't really have any complaints on the trade. So that was NRG. And then last trade I took was Hood. So Hood was breaking out over here on the 16th. You can see, again, very solid D1 chart. Just been a ton of entries in this guy. There's a breakout here, breakout entry over here, breakout entry over here. We can do a breakout entry somewhere over here. So just a ton of breakout entries on this stock. Beautiful price action, just hugging that 8 EMA, and it has been on a mission higher since April, up from a low of $30 to a high of $113. So some crazy price action on Hood, but this is a beautiful stock from earning to earnings. It's hard to stick with the trade for this long and have that kind of market conviction, but this is one of the few stocks there ended up panning out. So let's take a look at this M5 chart on the 16th. All right. So here's the stock on the 16th, and here's the market on the 16th. So market here is testing this low, kind of forming some bottoms over here, some support. So I figured that, all right, well, we're forming some support here. We're probably getting close to the end of this move. Because look, here's what happened, right? We got this low, bounce, marginally low, pretty tall bounce. Another low, holding up well. Then we break down over here, gap up, test this low. So it's kind of getting more stubborn, right? Buyers are coming in, buyers are coming in, buyers are coming in, right? Buyers are coming in. So you can see that we're not making too much progress every time we break out, right? Break out, we get a fake. Break out, we get a fake. So we get this overextended breakout here. That ends up being the snapback move. A couple of candles of volume here, and then we're kind of off to the races. So looking for some stocks that are relatively strong. Hood was one pretty early, had some decent volume. This stock has a tendency to run up hard early in the day, and then it will pull back. So when I saw this, I was like, all right, look, it's probably going to pull back to VWAP, so I'm just going to bid at VWAP and then, swing the stock. So that's what I was going to do. So I got a fill at 102.64 on the 115 candle. So I got this news candle. I was long 30 shares at 102.64. Immediately went against me on the news, but then it rebounded back up at around 12 when we got that selling climax. So I got a pretty nice price in by the time it was, 12, 1, 2. Stock was grinding up higher, starting to rise up, and then it tested this high of the day. So tested it pulled back, and then it was getting some relative strength over here at 2. So if you look at, yes, here at 2 o'clock, it was getting some relative strength. It lost it initially on the pullback, but then it started to bounce up higher. So I actually added 15 shares at 103. What did I add at? I added 15 shares at 103.71. So I was swinging a 1x position at 103 now. The average cost basis was here. My thesis was like, all right, well, we tested this once, right? So I figured after a strong move, we're probably not going to break on the first test. We're going to pull back, and since this pullback was relatively contained, we'll probably break through on the next test. So we got another test. Then we actually got it kind of stalling out over here, and then another pullback to VWAP. Yeah, over here at 350-ish. So, kind of end of the day, yeah, slightly up, but, a little bit flat overall. Then the next day, we got the follow through in the market. Hood made a nice run up higher. And then I believe on this candle here, around 10:15, I was like, all right, well, Hood makes this big run in the first hour or so. Market is, yeah, look, it's looking nice here, but then the price action started to die out. So I was like, yeah, it's probably going to pull back. Hood was nice and overextended, so I exited 15 shares of Hood. So I exited 1/3 of the position at 106.35. Market pulled back here and was somewhat contained. So I was looking at Hood again over here, and it was just kind of like at this junction, all right, it's kind of stalling, and then market started to rally, but this stock wasn't starting to rally. So I took another 15 shares off at 106 flat. Yeah, because market was making a new high of the day, and Hood was struggling to make a new high of the day. So took another 1/3 off at 106, and then stock was, kind of testing VWAP here, poked a little bit lower, and then was grinding up for the rest of the day before another flush back down to VWAP. So I was seriously considering taking profits here at 340 at 106, but for the effort of trying to hold my positions longer, I was like, listen, all right, I set an OCO. I'm going to try to take gains at 108. Be really happy if I take gains at 108. And I'm going to set a stop at 103.01, right? So if this stock goes against me, I'll just scratch out of the rest of the position for, still a win overall. And, live to fight another day. So I did that, and then Hood, we got a big gap up in the morning, so I took gains on the opened right at 106. I got in at 106, 109.76 as I took gains the rating position. So big gap up, massive green candle, and I probably would have, stuck with it a little bit, I would say, at least up to like 111. Or I probably would have put my stop over here at 109 and just try to ride this position up a little bit more. But overall, this is a fantastic trade. I'm glad I scaled out of it. This just added to my confidence in sticking with those positions. And just proud of, I think this is, when you have a great scenario like that, it's nice to feel really good about the process of hey, I bid better, so I got a nice price. I got closer to VWAP. I didn't immediately exit right at 106. I exited partial. And I still had some of my position on, knowing that I could scratch out of the last part of it, and this pushed up higher, and I got a nice pop up. So the fact that I scaled out here, I did the math. It actually, I got a $197 on the trade, and had I just exited all the position here at 106, I only would have gotten about $100 or $106 or something like that, or $110. So this almost doubled my profits on the trades by just sticking with it a little bit longer. One thing I have noticed is that I have a tendency when I scale out, I will scale out slowly throughout the day, but sometimes it's better for me to scale out a little bit more spaced out. So I'm going to try to be a little more spaced out on the scale outs. I think it would have made more sense for me in this case to, I scaled out here, then a little bit here, but wait for the pullback and then the retest at least, right? And then I can scale out over here. Like if I scale that the next part on the retest, even though the price would have been a little bit better and the result would have been the same, I think it would have made a little bit more sense because I was giving the stock a chance to continue up higher, and then I could take profits into that strength. So one thing I'm still working on, my scaling out, instead of being 1/4, it's been a lot of halves and thirds. So I'm going to try to spread it out a little bit more. And even a day like today, I mean, you could probably still justify having a quarter position on still on the notion that we could probably come back and test some of these highs around, 111 all the way to 113. So that's the only improvement I would make on this trade, but really nice swing win on this one. Okay. So 2 losses I had are the day trade shorts. I'm going to cover that at the end of the video. Let's go over the 4 day trades that I took, and we'll go back to each day in the market. Okay. So first day trade I took was Airbnb. I took it on the 14th, and here was the D1 setup. This stock was breaking through this downward sloping trend line over here. Had some, I was filling in. There was some little bit of a gap fill over here, but was filling in some of this gap. Also had this big gap over here that I wasn't, I had space for that, so I wasn't super worried, but I was really leaning on this trend line break on some decent volume. Yep, so here's the price action on Hood, or sorry, not on Hood, on Airbnb. Really nice, strong move early, pull back to VWAP. Another nice, strong move over here. And SPY, you can see on the 14th, yeah, it was rallying, but, wasn't super strong. So this stock was really looking pretty nice. Now, I was considering getting in on some sort of pullback to VWAP, but it didn't quite happen. Instead, the setup that I got was this breakout candle over here. So normally I would take it at 139.20, but I figured I would bid in a little bit lower, maybe at the midpoint of this candle. So I got in at 139.10. So we got this move up over here. So I was bidding right at the 8 EMA at 139.10. And I got my fill on this 105 candle, and we pushed up higher, right? We're testing this level here at 120. Now at this point, I was like, all right, well, it broke through this trend line. It tested this, but it hasn't really quite confirmed. And if I look at where I entered on the market, here is the 105 candle. Here's the 105 candle on the market. So market has been rallying. Stock has been rallying with it. But at this point, I'm up in the trade, and I was like, all right, I'm just going to set an OCO here. And if it rejects and it doesn't break above this trend line, I'll just scratch out of the trade and not worry about it. But if my thesis is right, it should break through and not really ever look back on my entry. So I was day trade long 150 shares at 39.10, and then we eventually got the breakdown strategy over here at 140. So scratched out of the trade. Sorry, at 135, I ended up scratching out of the trade, and I guess ended up saving myself a whole world of headache since this would have pulled back all the way to VWAP. Maybe could have gotten over here and then taken gains up the next day. But that's sort of it. So yeah, so that was Airbnb. Scratched out of that one. Next one that I took was SMR. And that was another one I set up today, but I took it, yes, July 15th. Okay, so here's SMR. Let's look at the D1 chart first of all. So this stock has been on a mission ever since it broke through this trend line on the 14th. I was bidding for it over here, just missed my bid. Didn't quite get to the prior day VWAP. You can see it tested just the upper third of this candle. So just missed my bid, and then the stock took off and didn't quite look back, which happens sometimes, the better bid, but you can still day trade the heck out of it if you really wanted to. And this stock has nice strong moves, and then it has dips. And I'll point out a couple of these, but SMR over here. So if I look at what's happening on the 15th, right? SPY is selling off. SMR is actually holding up really well. It's one of the few stocks holding up really well. So I look to, so I'm seeing this here and I'm like, all right, well, yeah, market is testing VWAP. It's holding up pretty well. Right, and we get this breakout over here at 12 o'clock. And I was like, all right, well, look, it seems like it has been holding up really well and grinding higher. So even if we get this bearish cycle here, the stock should hold up pretty well, and then it should surge up in the next area. So on this breakout, I was like, all right, there's a chance that it could just take off here. And I was still mildly bearish on the market. But honestly, looking back, it doesn't seem like a great entry point in terms of timing the SPY cycle. And you can see that's true because this stock ends up pulling back, and so does this this trade. So I bid for this at 42.80. So I bid at the halfway of this candle. So I get filled on the next bar, on this 1205 bar, halfway through here. Pulls back, and then it pops up over here at 1220. Right? So this is where I actually exit the trade for a scratch at 42.67. And it was because the market sold off here and it wasn't actually able to rally. And if this had become a double bottom and bounced up super hard, then I would have felt comfortable staying in the trade because I felt like this would continue. But at 1220, you can see that this market, yeah, it's kind of not really getting back into this range. Not really able to rally. So just figured I'd scratch out of the trade, pull back to VWAP, and then it eventually did find some support. You can see it started to rally over here. And then we got the pop-up, and you can see what happened with the market, right? So the market had to sell off here. Here's that 1255 candle, hold up really well. And then as soon as it started to stall and find support, this stock started to take off. So I was just a little bit, I had a nice idea, but I didn't sync the SPY cycles on this as well as I could have. And it had, I think, kind of wait for the selling to run its course. And it's interesting because the stock will start to take off when the stock starts to take off before the market does. That's how you sort of know, like, all right, well, we're getting in good shape here because the selling pressure is starting to abate, and that's what's putting a lid on the stock. And as soon as the selling pressure stops, the market doesn't even have to go up. It just needs to stop going down, and then this stock starts to take off. So would have eventually actually ended up getting a profit on this had I stuck to the original VWAP stop. But I was just keeping it pretty nimble on that kind of day trade for now. So that was a scratch / a tiny loss on this, and I think I was 100 shares on that one. And perhaps probably a better re-entry would have been somewhere here, 42.68, right? When its market has now found support, so I can sync this cycle up better and get back in the trade. Okay. Next trade I took was Coin. Coin has been quite a monster on the D1. This is a big kind of bearish looking hammer doji thingy. But Coin, yeah, nice break over here early last week. Started to break out of compression on the 16th, actually. So that's the D1 chart. Obviously very strong. There's good volume in here. Coin is a choppy stock that makes really big moves up and down. So here's Coin on the 16th. Market is selling off right here. And then from 1 o'clock all the way over to 1:20-ish, right? Market is pulling back. Coin actually breaks above the prior high on some heavy volume candles. So this is what I'm seeing on my chart, and I'm like, hey, this is looking pretty nice. How about I get a better bid? I feel like we've had a nice compression. This is where the stock can have a little poke and then make a really big run, because this stock can tend to really stack up once it gets going. So we poked up over here, and then I actually got my better bid. I was bidding at 402, and I got in at 402 at the 145 candle. And here's this market just kind of flattening out over here after that. I was bullish after this, considering that we made some higher highs, right? Higher highs, higher lows. So this trend is starting to move up, and we got above the opening of this red candle, which I viewed was bullish. So got my fill here, and then it started to poke up higher. And on this stock, I was just looking for like $3, and I just missed my $3. I got to 405 488, and I was bidding for 406, so just missed it. And it was kind of getting up over here ish somewhere, and just sort of compressing, not really rallying with the market now at this stage later at like 230, 240. So I ended up taking just $2 on this at 221. So I think I got out. Yeah, I got out somewhere just right over here. We got this poke and this bearish hammer on some volume. I was like, all right, look, I'm just going to take a small win. And again, just not really push it too much, since I'm only taking this as a day trade. So again, if it starts to go against me later in the day, I'm not sure if it'll come back to recover. And it ended up what happening. So I had to pull back later in the day, and then it made this nice move actually later in the next day. So that was coin, small win, but took a win on that nonetheless. Last trade, that was a day trade, was ASTS. Beautiful stock. And this was one that, making this massive break of this trend line earlier back over here on some volume, and for then it really took off. Pulled back after this big move, and then it started to rally again. Another trend line break over here on the 16th. So was day trading it on the 17th. Stock had broken up on heavy volume to a new all-time high, and it's really, really soaring here. So I put in some nice steady price action here, and it pulled back to VWAP on the 17th. So let's look at the market on the 17th. And I took it right at 10:45 at 55.60. So the market had a flat open bullish trend day. This is one of the best trend days you can get. A little dip early in the day where you can get in, around after the first hour. So you have plenty of time to ride the stocks. You have enough information to get bullish on this dip at 10:45. So I got in at 55.60. So right over here, as this candle was forming, I like this breakout of support. I like how it held compression with these tails and was starting to rally higher. And I was just looking for 60 cents on this trade. So as long as 100 shares, and I got my fill on the 60 cents later at 56.20. Stock did end up rallying a lot higher. So again, you had a chance to stick with it if you really wanted to, but I'm just sticking with the hit and run trades at the moment. And yeah, took $60 on that. And that was it. So that were my day trades this week. There's definitely some day trades where I was marking down I think I marked down this week over, I don't know, close to 12 day trades maybe, that opportunities I saw on different days, as well as a couple of trades that I liked but I didn't take. So I'm trying to find the right sweet spot in terms of getting in on those trades. Like on today, for example, I didn't end up taking any day trades. Obviously had some work to do for my 9-to-5 job, but I had, I think, 5 different trades that I liked, but I didn't take just because, one, it was a bearish trend day, and all of them ended up being right. Okay. So now let's look at the swings that I held from last week. So let's start with Carvana. So Carvana here, I took it at 355.20, 352.30. Sorry, right over here. It had held on this bearish day in SPY and was starting to rally up and break through some this kind of support over here at this prior high. So that's where I took it. Now the stock is in compression, right? It's just bouncing around in compression. Couple of pokes below the 8 EMA, but so far it has been holding. We also had this low plus trend line that we were leaning on. That so far it's holding, but now it might be breaching as a time breach, not as a strong technical breach, which is not as strong as a breach. It just tells us that the stock is kind of stalling out here. So I'm stuck in this compression, and I have I have many chances to scratch out the remaining here. I can scratch out on the 10th, which I missed. 11th, I could take a tiny loss. 14th, I could scratch out. 16th, I could scratch out. 17th, I could scratch out. So I hold through the 15th because it had a nice bullish hammer on this bearish trend day. And on the 16th, it did poke up here. It sold off, but I wanted to see it actually close near its high because that would tell me it's getting through some of this resistance that was forming in at around 357.50 or something like that. So we got a test here, and it didn't quite get through. Another test here didn't quite get through, and then had another poke below to test this low over here. So this stock was just chopping around, not really rallying with the market. And, I wanted to see some better price action quicker. I didn't want to get stuck in this position earlier in the day. So I'm going to just take a look at where we can look at the couple days of price action here and just what I was thinking and what I was seeing, because that's important for me to do and could be helpful for people watching this video. Okay, so here's the stock. Let's go back on the SPY chart. Okay, so July 9th, gap up new all-time high, sell off, start to find support, and then we start to grind up higher. Stock holds in this level, rallies up, and pops up over here on some nice volume. So I'm like, all right, this is looking good. I can probably take gains near the high at 360. So we break out over here. It's a choppy stock, so I don't chase the breakout candle. I bid about $1 lower, and I get in about halfway, maybe in the top third of this breakout candle at 352.30. Stock tests this high again before getting sold off, and then goes against me to close at VWAP, only to rally up high earlier in the day and hit some wicks over here at 357. Now, coming into the day, I think I missed a little bit of the open, but I see the stock right over here at 354.19. I've taken a partial loss on the stock already. So for me to break even on the entire trade, I'd have to get out at 355.30, and it was a 354. So I was like, you know what? I'm just going to wait because it's probably going to break back up. So doesn't do it for the rest of the day. Comes back up. Now it's testing the support over again, which is at 343. Bounce up here, test support, pokes below it over here, and then rallies up pretty strongly from that support. And I was like, okay, look, we needed that poke, flushed out the sellers. This is the nice rebound that I'm seeing in the stock that I want to continue. So test over here. We get some choppy action, push up over here, back to that 370, 357.50 level, right? Poke back above here, get another rejection. Try to get another rejection here. And then we actually started selling off later in the day versus closing at VWAP. So this is where we got this doji. We get another test over here on the 17th, test it back again, a third test, and then we flush out for the rest of the day as sellers keep unloading on this guy that continues the trend, finds support at that prior 5-day low, and then now the stock is rallying again, getting back down to the trend line. So end up taking the loss here at around 340, and obviously it would have been a better loss holding at the end of the day. But my thinking was, okay, well, this stock has not been able to rally at all with the market. Market has gapped up to an all-time high and starting to sell off here. Carvana gapped up, immediately filled in this gap, and started making new lows for the day. So I figured, you know what? My market conviction isn't as bullish as it might have been, earlier in the week, right? We made a big move. We got earnings coming up. We've been in this choppy compression in SPY now. I mean, we've been in this compression, this like mildly bullish compression here pretty much for this whole month, right? The first 2 weeks of the month. So, I'm not like trying to time any sort of dip here, but I do want to reduce exposure and be more in cash. So if this position is not working, I was going to cut it. So couple of things that I learned on this trade here. So first things, this whole turning a day trade into swing, a couple takeaways that I have. First, because I took this whole partial loss, it just made me have to aim for a higher target to get out of the trade. And almost pretty much all of these were winners in the first day or two, right? Like for Carvana, right? I had my winner right here on the open when I saw these wicks, right? If I got in 352, there's $3 right there. Get in and out of the trade. And the reason I had to be a little more nimble is because this that I took it on, this is not a strong signal bar, right? Like we got the breakout here, but it's not a strong signal candle. Like, I don't know. Let me see if I can find one. This is that's a sort of okay signal candle. It's just it's a really choppy stock. See, it grinds up over here, really choppy here. I mean, this is a better bar, right? We get a clean break, not a ton of volume there. So, right, like there's not a ton of volume in this move, and it's making these marginal new highs here. So, it's not a strong signal bar. I have to be more hit and run in this. It did end up working because I had a decent entry, but you got to take them, 1 or 2 days, they should probably close. The next thing is that I wouldn't size to day trade size. So if I'm taking a day trade, I'm going to stick in the hit and run mode and probably just not let the trade go against me. So if you remember, I'm going to go actually over here in the M5 because it's a little bit easier to pull up. Okay. So this is Carvana, right? I got in over here. And one, I could have taken a tiny gain over here if I wanted to. But I think at this point, what I could have done is just say, hey, look, like I did with Airbnb, right? I said, all right, if this breaks up higher and continues, then I'm good on my day trade. If this starts to go against me, I'll scratch out and then just wait for a better entry. So I think that's what I should have done on this day trade. And I didn't because I was willing to let it turn into a swing. And I missed my exit on the next day, like I said. Now, I held and I gave it chances to actually break above and continue this D1 trend. But so far, hasn't really been doing it. Just kind of been chopping around here. So, yeah, that's the next thing. And the last thing I want to say in Carvana is that, look, it has earnings coming up on the 30th. So I have maybe just a little bit less than 2 weeks. 50 SMA has been rising up since I took it. When I took it, it was at 308. Now it's at 320. I got AVWAP also rising up here. So this could dip down to the 50 SMA, and I would have been fine to hold it because it wouldn't have been a crazy, my max loss was like $50, or $45 lower. So I could have held for a move somewhere here, but I didn't know if this would test the 50 and bounce up in enough time, right? And I need that market tailwind in my favor too. So if I'm less confident about the market and I'm running out of time on Carvana, it's going to limit my options on the trade. So I might get out of a big loser. I may get out of a big winner, but I'd rather take a smaller loss here. Then I feel like the odds to me, it feels a little bit more 60-40, 55-45 kind of. I think it's still bullish. It still could go higher, but my conviction is just not as strong as it was earlier here. And I think the 16th and the 17th were the days that changed that because it didn't quite, wasn't able to break above this level in time. And I don't want to be stuck in a stock that's in compression, right? I want to be in the stock that's moving. And so when it's in compression like that, it tells me that I don't have as strong a sense of where it's going to go, especially when it's this sort of marginal new high here on the D1. Okay, so that's Carvana. Let's look at Sound, S-O-U-N. So took this as a day trade. I want to pull it up here actually because a little bit faster. And then I'm going to go to the 9th. Okay. All right. So, Sound, first of all, I'm also going to pull this up on the D1. Like I mentioned in the last video, missed a couple of stuff here. There was this high plus trend line coming into play, as well as this all-time, I think it's the highest AVWAP. The all-time AVWAP is coming up over here as well. So, missed this technical price point when I took the trade. Okay. Second thing on Sound is that I took it as a day trade turned into swing. So if I go back to this chart, I took it right over here, 303. So broke out over here. I bid in this candle. So I got a nice bid, moved up against me, and then sold off pretty hard. So again, at this point, it should have been like a, hey, I really like my entry on this guy. This is a pretty clean entry. But because this is a D1 resistance, it's actually a lot less likely to break through and test it because this is some major resistance on the D1 here. So it's probably going to hop back up for a retest. Much more likely for a lower high from what I've seen than an actual break, especially given the gap up over here where it's kind of used a big chunk of that power. You can see it can make these gaps up and test before coming back down and trying to find that support a little bit lower. So that's what happened. So on Sound, I was like, all right, I'll probably try to take like a lower high here. I think I was trying to get like somewhere here, maybe like 1333, somewhere here, 1330 would have been a pretty nice win. So got a nice poke above 1323, and then we sold off over here. Had my chance to scratch about an hour into the trade. 45 minutes or so, leaning on that VWAP. I felt that it could pop up over here. We got the sell-off, and then it took the partial close right at 1273, right after that, right? Now, if I didn't take the partial close again, right, didn't take the partial close, I could have actually gotten out over here on the open for a win overall on the trade. Again, that's that little overnight win because there is a bid on this, but because I needed now to make $1 on the trade in order to break even on the whole thing, I was just going to hold it. So holding it again, right, get another bit lower, another move higher. All right, this looks good. We get another poke. We actually test this high finally, double top, and then boom, whoosh, massive selling pressure over there, right? So you can see test, unload, and then we get the whoosh, test this support over here, couple of tests of the support, and then we break down through here, big gap down to test this AVWAP on the 11. So holding through all of this, I sold on sound. I sold the, where is it? Okay. Yes, on the 10th. On the 10th right here when it broke down, I sold the 1350 calls for a 33-cent credit. And 1350 because if it got up to that price and then I get called out, then I keep the credit on the calls for $30 and I can also get profit on the original trade, 40-cent profit on the remaining shares, so end the trade with the smaller loss. So it tests this level and then it actually ends up rallying up higher. So it's looking okay over here, finding some support. We get a strong move on Wednesday over here, right? Get a test and then some nice steady green candles closing near its high of the day. So nice bullish hammer, getting above that 8 EMA on the D1 chart over here. We get a nice long green candle early, and now it's testing this high from May 14th at 1265. You can see that's where it was hitting some resistance. Test that level, bounce down here, and then it started to find some support. So I was thinking of considering adding to the trade at this point, but I decided not because it didn't close above the support, so I just didn't know if it would test and then come back down, and then now I've added to that position when it's gone against me. I did also sell the $13 calls for 20 cents. I think somewhere I got filled around here because at this point I was like, all right, well, look, you know, it's kind of over here. It's still below this gap. I'm not sure if it's going to get to 13, so I sold like the July 25th 13 calls for 20 cents. And so that it went against me, so I ended up closing that out for a loss on the open this morning. So stock gapped up. I closed my shares at 12.93, and then I closed the short calls and then the shares because I don't have the option level to have the naked short calls. So had to close the short calls, then I closed the shares. Stock was testing this prior level here, so that was my chance to get out of the trade on the open. And then I took the loss on those short calls. So I got in for 20 cents. I got out for like 63 cents. So I took a $40 loss on those calls. Took a $30 gain on the July 7th calls or last week calls that I took. So overall, I lost $10 on that. So not a huge loss, but did add to that. And then I kind of took a small loss on the remaining position, which was like, I don't know, $11, $12 on the remaining position. It was 125 shares at 10 cents, so $12.50. So overall, took a loss on the trade. And I think a couple things on this trade. So that's basically the play-by-play of what happened. So in terms of managing this, right, I was like, all right, well, I'm okay with holding this to $9. It's probably going to come back, bounce, and test something and then bounce back up, which is my key to get out of the trade. I think I messed up in a couple places. So the most top-end decision-making place is just turn the day trade into a swing, add a lot of complexity, and because my day trade size is different than my swing size, it means that like I have to have a crazy different risk tolerance if I want to swing it. So I had to take the partial loss, which again, just like Carvana, just like Tesla from last week, it puts pressure on me to make profits on the trade. And you can see that the Tesla trade actually, had I held it longer, would have been in profit and maybe made up for these losers. But I was cutting that trade a little bit too short, and I was holding these losers a little bit too long. So those are the first two things upstream. Second thing is, all right, so I've done that. Let's say I've decided the partial loss. I think it's going to go in my favor. What am I going to do? Well, one thing I can do since I have enough shares is sell some calls to reduce the cost of this. Now, the first week when I sold the calls was fine because we just had that selling pressure and it was good. This week, I was also fine selling the calls. I didn't think it would rally this strong. But one thing I needed to do was actually sell the calls near resistance. So when if I look at sound over here, right, see here it is here on here's this, right, here's that resistance level. So selling it near resistance versus kind of down here. So either at VWAP or, again, somewhere over here, that's when I'd sell the calls. And I should have sold this week's calls versus next week's, because if this does go in my favor, I can at least hold this position for most of the day, right? So I'd hold it like, okay, look, maybe I take a 20-cent loss, but those calls expire worthless. So I can have those calls expire worthless and then close out the remaining part of the position rather than having to take the loss on the call. So I still get the credit on that overall. The other thing I could have done, which I didn't do, like I mentioned, was I could have added to the trade over here, right? Maybe could have added like a 1250 and added, 75 shares or something like that. So I could have added 75 shares. That we have 200 shares total. Maybe even sold another call, same week's call of expiration, right? And then taking gains on those on the open. So the trade with that win, maybe taking some losses off the table and reduce the overall loss in the trade. So you can see that like the trade management gets a lot more complicated. It is sort of fun in a weird kind of perverse way, but it does get a lot more complicated because I'm just trying to lower the cost basis of this. This has a huge IV, so I was like, I can definitely sell calls. And honestly, if I could even sell puts against it too when it bounces up and tests VWAP over here. I mean, if I can sell like the $10 puts or $10.50 puts, buy it around the 200-day SMA, would have not been a bad trade at all, and would have gotten a nice amount of premium for that. So something to take advantage of, but to me, I guess what I learned with my little experiment is that turning day trades into swings is not something I want to do unless it is like if I'm doing a debit spread or if I'm taking like a day trade call with like a 2-week expiration or something like that. That's like the only thing I'd really want to do, but I think I want to keep it simple here. Keep the day trades as trades, going for hit and runs, and really ride with the swings. So yeah, those were all of the trades this week. So yeah, I'm keeping the streak of green so far. I think couple of mistakes here and there. I don't think I have traded my best, but I made a lot of good decisions this week, and I think I've just sort of cleaned out all the remaining bad decisions from last week and this week to make some smart trades. So the only position that I'm still in right now is my FTNT PCS. I'm in the 101-100 PCS that expires this next Friday on the 25th. So that is in good shape right now. I was a little worried on this June 10th candle because this was a massive red candle, and I was like, all right, well, I wasn't as concerned, and maybe if it was the top of a trend, because that could signal reversal versus this is sort of in a compression. You kind of get these candles, but I mean, this was a really big red candle on the 10th, and I was like, what did SPY do on the 10th? I'm trying to remember. I don't think it did too much. Yeah, this is SPY on the 10th. Literally, right, tiny day. This stock selling off on some decent volume. So I was like, all right, holy shit. Let me, I'm not like going to panic out of the trade. I'm going to give it time to rebound and evaluate the price action because oftentimes you will get some sort of bounce. And I do want to point this out. So like this week, right, it closed. Here's on Monday. So Monday, here's it closed on Friday. So I was like, not looking great. Monday bounced up to the 50 SMA, right, and closed near it. So I was like, okay, good. I want to see this continue the next day. Next day, it continues, closes above the 50, and we actually get through the halfway point of this long green candle. So now I feel a lot better. And I was like, all right, look, I've seen there's enough support here for this trade to last the rest of this week. So we get another test, bounce out, and then we kind of break through this. We have some like compressions over here. There's kind of this compression zone is what I like to call it. I mean, there's just like so many little pokes and candles and prods and stuff like that, right? That's just kind of coming up in here. So to me, all of this from 106 to 105, let's call it 105 to 107. 105 to 107, there's this compression zone where there's just a whole bunch of wicks tails, high volume candles, gaps, so on and so forth that the stock is rubbing up against. Now, I don't need this to break through. I just need this to not fall below 101 by next week. So I want to see this hold a 50 SMA, ideally for most of the days, and then I can have it expire worthless. Now, if the market does decide to pull back hard here and this decide to sell off, then I may have to evaluate the price action at the 100 or the price action kind of around here. You can see 100. There's some support, psychological support, 99. There is some support as well. Make a decision. I may be more prone to scratch it in that case, which would be unfortunate. But typically with the PCS, you're better off really riding it as much as you can, unless it's made a giant move in a really short period of time. You can take like an 80, 85% profit in a couple of days, but it doesn't always happen. I think you're better off, again, just riding it out. Stock has done what I want it to do, which is nothing, right? It's done absolutely nothing. It's gone sideways, and currently I got in at 21 cents. It's currently at 13-cent credit, so I'm already up almost half on that. And on any move, right, it's got to happen quickly because now this last week, the time premium decay is really going to accelerate, and the longer it takes for it to go down, the better and better it gets. So I had that working for me, and that should give me a nice little boost for next week in terms of profitability. Okay, that's the only open position I have. I'm in all cash otherwise, and I'm going to wait for the next little dip on the market, stick with some day trades, look for maybe some overnights, and keep it light and keep it nimble. So that's it for today's video. A little bit longer, but a couple of different trades to talk about from last week, as well as a couple more swings I took this week. So, a lot to get through, but hope this was helpful. Thanks for watching, everyone, and I will talk to you all in the next trading review.